Good morning, good afternoon, and good evening. My name is Larry Hoffman. I am with LJH Investments, and I wanted to first just say thank you for taking your time to watch this video. It truly means a lot to me. And as I said, my name is Larry Hoffman. I am the CEO of LJH Investments. We are a Cincinnati, Ohio-based investment company. I began investing in real estate back in 2006. I have a bachelor's of science in electrical engineering from the University of Cincinnati. I am a proud father of 4 children. I serve Mass at the cathedral in downtown Cincinnati. I'm an avid runner and I absolutely love playing the guitar. And so, as I said, I started investing back in 2006. These are just a few of the deals that I've done. This is really just a small subset. If I listed all the other deals, we would be here for, for hours going over them. I just wanted to kind of give you a small synopsis on some of the deals that I've done. I've done everything from renovating, buying properties, renovating them, selling them, renting to own, cooperative assignments, wholesale deals. I've rented, as I said, I've done Section 8s, rentals, short sales, mobile homes, and subject to. So these are just a few of the deals that I've done. And as you can tell, the main focus at the time was buying them, renovating them, and fixing them and selling them, right? So now our main focus is we buy distressed debt at a large discount. We no longer rehab these houses. We became the bank. We prefer underwater, under owner occupied assets. Our number one goal is to try to modify and reinstate the borrower. Our primary and secondary markets are Ohio, Michigan, Florida, North and South Carolina, Texas, Indiana, Missouri, Kansas, and Pennsylvania. Now, we buy assets across the United States, but we primarily try to focus in these states. We like residential assets from $50,000 to $250,000 as is. We like commercial assets from $250,000 to $1 million plus. And so more than likely, you received a letter or a postcard from me talking about using your self-directed IRA money for investing. And so I just want to go over a few deals that I just recently did. I just recently purchased these deals in my self-directed IRA. And and as I said, I just want to kind of go over the numbers and just give you an idea, kind of like what we're looking for, what we do, and how we work. So the first note that we purchase is in Indianapolis, Indiana. It's a performing note. It has a fair market value of $90,000. It has an unpaid principal balance of $18,565.03. It has an interest rate of 7.625. I actually purchased this note for $6,500. The principal and interest payment coming in on this asset is $220 a month. So the cash on cash return is 35%. I mean, it's mind-boggling, right? And this includes the servicing costs. And so I don't know if you're familiar with this, but we use a third-party servicing company. There's a lot of them out there, but this one's nationally known. It's FCI. In this particular case, we're using FCI for our servicing company. And and what the borrower does is they pay this third party, and so they pay they net out of this principal and interest. This is the principal and interest. There's also taxes and insurance, so all of that money is escrowed as well. So they make that payment, and then FCI, they'll pay the taxes and insurance, and then they'll take out their fees for the $220 of $30, and then they'll send me the difference, which gives me, like, yearly, right? This is giving me a 35% cash on cash return on my money. So the exit plan on this one is just simply hold. Long-term growth for my self-directed IRA, which is great because when you see I purchased this property for $6,500 and they still owe $18,000, $18,565. I mean, I'm more than double or triple going to make back my money. So the strategy is just to hold this guy. The next note that we actually purchased is in Kansas City, Missouri. This is a performing note. It has a fair market value of $95,000. It has an unpaid principal balance of $15,005.42. It has an interest rate of 8%. We purchased this one for $6,400. And the principal and interest payment on this guy is $334.65. And my cash on cash return is 57%. And once again, this includes that $30 a month servicing costs. I mean, I know it's mind boggling, right? So, and the exit plan on this guy is just simply hold. I'm going to hold this. They're not too far from paying this guy off. So, it's just once again just hold and have my self-directed IRA just grow in value. Now, this last one that I purchased, as you could probably tell, it's by the picture. It's a non-performing note. This one has a fair market value of $65,000. I purchased this property for $100. The exit plan on this guy is to do a deal. It's not a dill pickle. It's a deed in lieu of, or cash for keys, or foreclose, or just simply 1099ing the borrower and just forgiving the debt and just having it as a write-off. So as I said, we just closed on these not too long ago, and I just reached out to another third-party vendor that we use. They're going out doing a broker's price opinion on this guy, a BPO. They're doing a BPO on this. They're actually securing the property for me today. And then they're also taking internal pictures for me. So that way I can kind of get a general idea of really what the exit plan is here. So as I said, I have several different strategies to choose from with the exit plan. Really, I need to wait to see what the pictures really tell me when I get those back. I should have those back sometime today or tomorrow. But let's just kind of go over the numbers on the performing note, and I'll go into a little bit more detail on the non-performing note and the returns that I will more than likely make on that guy. But with this performing note, those two assets I bought for a total of $12,900. It's throwing off a monthly cash flow of $494.65. So, excuse me, I took the 220 minus the servicing costs on that guy, the $334.65 minus the $30 servicing costs. The servicing company, they charge $30 per asset. So that's how it's in order to service these loans. So that's how I got the $494. And so the yearly cash flow is $5,935.80. Now on this on this performing note, my cash on cash ROI is 46%. So you just take the $5,935, divide that by what you pay, and so I'm roughly getting about 46% cash on cash return on my money. And then once again, the $30 is a servicing cost. Now on this non-performing note, I purchased this note for $100. And this is part of a package. It was all or none. I had to take the dud with the deals. So I couldn't really pass this one up either. So once again, I purchased it for $100. The exit strategy is to do a deed in lieu of, cash for keys, or foreclose. So the fair market value is $6,500. Estimated cost about $12,000. Honestly, that's really high, but I like to be really conservative on my numbers. Miscellaneous cost $2,000. Servicing cost to service this loan would roughly be about $1,500 because it's a different price structure on non-performing notes. So I figured if I take $65,000 and if I sell it at 80% of the fair market value, that roughly takes me down to about $52,000. Back out the foreclosure costs, back out the miscellaneous costs, back out this excuse me, the miscellaneous costs, back out the servicing costs, and back out my $100 that I paid for with. It's roughly going to give me a profit of $36,400. And then when you look at the cash on cash return, you take your profit over what you paid. It's roughly giving me a 364% ROI. Do I really think it's going to be quite that high? No, I don't think it is. But mathematically, that's how it's kind of shaking out now. Even if I did this and say I did a deed in lieu of, and the borrower just signed the property back over to me, and I sold this thing for $5,000. that's still a pretty good ROI, right? Um, yeah, it's one of these things where either way, I don't really think I could lose with this deal. But when you look at the numbers this way, yeah, it's throwing. It's mathematically it says it's throwing off a 364% ROI. And as I said, is it going to be that? More than likely not. But it still is a pretty good deal. But in any event, if you're looking to continue the conversation with me, if you want to look to see how to use your self-directed IRA to earn above average returns like these, please feel free to reach out to me. You can, call me on my cell phone there, 513-301-1468. Shoot me an email, Larry at ljhinvestments.com, or you can schedule a 30-minute call, talkwithlarryhoffman.com. It'll pull up a Calendarly website, and there you can get, schedule your time that's convenient for you. Or you can look me up on LinkedIn. You don't need the @ sign, but go over to LinkedIn and then do the Lawrence J. Hoffman Jr. You'll be able to find me there. Or you can just simply go to my website, ljhinvestments.com. There I have a free report outlining how to use your self-directed IRA for investments. But since you're already doing this, you already know the value in it. But even if you have money sitting underneath your mattress, not doing anything, or you have money in a bank account, or maybe you have money in a bank CD, a certificate of disappointment, please feel free to reach out to me anytime, and we can just sit down and talk, and I can go over these numbers, and then other deals that I've done and other returns that other people have gotten. This is truly a really good win-win for everybody. So when you have the time, or if you have the time, or if you're interested, please feel free to reach out to me. Once again, I really do appreciate you taking the time to watch this video, and I really wish you the best in life and continual success with your investment career. And thank you for watching this, and have a really good day. Thank you. Bye-bye.